Alrighty, we're recording. Begin again. Thanks everyone for making the time. Sid will be running today's workshop and I will be assisting in moderating. If you have any questions, please write them in the chat or down the bottom of your screen, there'll be a button that says reactions, which will let you to put an emoji up. If you'd like to use one of them to signify that your hand is up, if you have a query or question, I can direct them to Sid for answering. So first of all, I'd like to begin by doing a welcome to country, to acknowledging elders past, present and emerging of Cadigal land. If you would like to have a copy of these slides, we can also provide them to you as well in the future. There will be an email address that's in the chat right now that you can access, but we also have them up as well as a recording of this workshop on our YouTube. All right, shall we head to the next page? So obviously this is about equipping people with financial skills, and it came about when Kumar Jha, who is our CEO and founder of Opportunities Australia, started to think about what areas and aspects of the job seeking and return to work process can best assist people to be ready for the labour market. So Kumar himself is a very, very big advocate for helping people within the community to be able to find work and access those unspoken connections within corporate opportunities for partnerships. He's very charity minded and has done a lot of personal work and dedicated a lot of hours to his own endeavours into helping and connecting the community around us. So a little bit about Opportunities Australia. We are a fairly young charity. We've only come together in the past 12 months, but already starting to make some really big impacts within the community. It's a social initiative looking at unlocking what's possible for people to be able to progress their careers. And part of our mission and focus is connecting people who might have been unemployed for long periods of time with job opportunities through partnerships that we've made with companies so that people can do things like internships and mentorships. We're also very big on providing training and employment, hence doing workshops like this where we can offer them free of charge and be able to access people from all over Australia. And also, as I mentioned, these are recorded and then put onto our Facebook page so that people can go back at any time to be able to look at this information if they want to refresh or review. So we really aim to reach a large, maybe sometimes untapped area of the community, and we're very happy for you to share Opportunities Australia with your friends and family, with your community, with your church, and get the word out there because we really do want to be able to help people in these different avenues. Okay, so a little bit about Sid, I'll hand over to you.
Good afternoon, everyone. I'm very excited to be doing this financial management workshop with our esteemed associates, Freya. Thanks for moderating and leading the charge in this one. Very happy to be a part of Opportunities Australia, as I truly believe in their mission to enhance the Australian life by making more opportunities for jobs through a range of education and mentorship and accessing the connections that we have within our network. So a bit about myself, business owner, co-founded Pop Business and Pop Tax, been a chartered accountant with 10 years experience in the business and finance industry. Personally, I'm very passionate on helping others achieve personal and business dreams through practical and valuable advice. And yeah, these businesses that I co-founded were to help specifically Australian small businesses thrive and create an overall enhancement to the standard of living in Australia. So let's just go through a few objectives for today's session. This was created as a money management 101, so very basic. Provide information and tools to help you develop these money management skills. Obtain fundamentals for budgeting and investing, so that's also related to money management. Understanding basics regarding your tax return obligations, which happen every year, so it's always good to keep on top of this and understand a bit on how it works. And overall, provide guidance on money-related questions. So throughout the workshop, feel free to drop a comment in the chat or just interrupt me. Happy to make it as interactive and useful to you guys as possible. So just a disclaimer, don't consider any of the contents of this workshop as financial advice or product advice, purely for general educational purposes, and please do seek professional and expert advice that is unique to your situation. So yeah, topics covered. We'll go through basics of finance, creating your 21 budget, how to evaluate an investment, and how to manage your annual tax lodgement. So very high level overview on these 4 topics. Not meant to go in depth. So yeah, please ask any questions. So first topic, let's understand the basics of finance. And the reason why I like starting here is because throughout your life, there may have been habits and ideas that you've internalized that may have been incorrect, and you may need to let go of to start from scratch and build the right foundation. So this workshop is to help you start from the very beginning, make sure we're building the right foundations and structures, and a house on sand will not stand. So and if you think these topics are a little too simplistic, don't forget this is just an open 101 session. So even if you know the concepts, it's always good to revisit these and rethink. And sometimes hearing it from a different person makes all the difference. And yeah, please take this as an opportunity to learn, again, in a non-obligatory and unforced manner. So enjoy the session, make it as interactive as you'd like, and yeah, let's dig in. So yeah, the question that everyone asks is, what is money, and how do I make more of it, right? So the definition, the formal definition, it's a current medium of exchange in the form of coins and banknotes, and in today's day and age, that also includes, in some circumstances, cryptocurrency, which is seeming to be all over the news again, which is very interesting. Another evolution in the finance industry in the world we're living in today. So how do we make money? It's a very important question to answer, because some of us might be caught in jobs that we've just stumbled into, and it's sort of just day-to-day things recurring, and you're caught in that sort of cycle. So it's always good to step back and think about, okay, how am I making money? And the main ways that people make money around the world is how you spend your time. So time is very important. You exchange your just get some feedback. Thank you. And so time, you exchange time for your money, and this is usually done with effort. So you're also exchanging your effort, and you can consider this as physical and mental. So and because physical effort can be replicated by a lot of different people. For instance, moving as a hypothetical, moving a rock from point A to point B. A lot of people may be able to do that job. So hence why there's a value associated with that physical work. Whereas a mental job, which might include you having to manage people and manage their personalities, manage money, things that take more time and thought and planning to do, or just a little more complex that requires years of training. That's a level of effort that is also that can be changed for money. And with the effort, you can create products. So physical products, the TV in your living room, that was created through physical and mental effort. So that's the price that you pay for someone to create it, manufacture it, ship it to your house, pick it up, design it. So all of these things that you look around you are products of someone's efforts and time. And services, that's also a byproduct of time and effort. So for me, for instance, we provide tax and accounting advice. Those are services because we explain on how to do business, conduct business better, find strategies to increase and optimize business processes. So that's a service. Even behind the counter, people at the register, that's a service. So yeah, byproducts of time and effort. So these are the main ways and things that are exchanged for money. So I know very basic. So making money, how do we make more? And how do we make more of our time? We have to use our time wisely. Think about, do I have a lot of energy, or is my mental capacity quite significant? Can I apply that to a certain industry that would help me create more value? So, the money is in exchange for value. The more value you can provide, the more money you can make. One way to think of this is also consider your strengths and weaknesses. As I said, if you're very good with a certain thing, try and focus on that and build on it. Making money out of your weaknesses can be very difficult. So this is where you'll need to balance your expectations with reality. And then create an action plan to achieve your goals. So this is something that we can go throughout this throughout this workshop. So do we have any questions so far?
No, so far so good.
Great.
We're actually trying to get it up on the screen here in our office because some of us don't have access from our computer.
Mm-hmm.
So you might go up on our screen. You will see us.
Awesome.
Pretty soon.
That's awesome. All right. So where do we start? Since, I'd hope that everyone here is making some form of money, which is necessary to maintain a living standard. It's just the way the capitalist world works. So where do we start? A good place to start is assessing your current situation. And this might be new to a lot of people because it's hard to assess yourself sometimes, because it's sometimes difficult to look inward. So what would be good is to build your personal scorecard. And what that means, I can explain this table here. There's 4 boxes, and the top are your income and expenses. And these are the ones you'd be most familiar with, income on the top left. You've got wages, salary, for your job. And you might have money in the bank, which may earn interest. And in this day and age, it's really, really low. If you have a investment property, you will be earning rental income. If you have shares in the stock market, you'll be earning dividends perhaps, or if they pay dividends. And if you have a business, you'll be making business income. So those are the main income items you should be familiar with.
Yeah.
And so the flip side of that, the flip side of the coin, and this is the stuff that you pay for day to day to have a standard of living, food, clothes, entertainment, subscriptions, phone bills, utilities. And then on the bottom two boxes, you've got assets and liabilities. Assets generally will provide an economic benefit. This is the formal way they talk about it, an economic benefit, which means ideally over a period of time, this will lead you to increasing your wealth or your income. It could be through an increase in income or an increase in the asset value. So say your property was 400,000 this year, and then it's 600,000 next year. You've seen an increase in your wealth of 200,000 in your assets. But it's pretty difficult to find those house prices in Sydney right now. So it's just a hypothetical. Liabilities, you can think of these as debts. So things that you owe. People might loan you money, and usually a bank, could be family. So home loans, car loans, education debt, credit cards. So these are things that'll decrease your economic benefit over time, because it'll increase your expenses because you'll have to pay interest on that home loan. You'll have to pay interest on the car loan. So it's the cost of having the convenience of someone give you money up front. So whilst you're starting out, it'd be beneficial not to accumulate too many liabilities, as this could hinder you in the future. So you probably heard of a debt spiral, and it causes a lot of grief and issues. So if you're stuck in there in a debt spiral, do reach out to experts that can help you get out and relieve that pressure. So I'd like to point out this quote. I think it's very important, especially in this day and age. If you fail to plan to fail. So that's why through this workshop, we're going to give you tools to help you plan ahead, plan 2021, and come out stronger. So here's our first tool that you can take away with you. Please take notes if you'd like. This is how you can create your 2021 budget. What's a budget? It's an estimation of income and expenses over a time period. So for now, we'll just create it over the year. You can start as today. You can start at the end of the month. And then you just map it out for the next 12 months. So you can, if you're familiar with Excel or you're not familiar with Excel, as long as you have a piece of paper, you can make these columns to create these months. And then you can create, March, April, May, June, July across the top. And then as you go down in the rows, you can put all your income and all your expenses. And then once you've filled that in and you've sort of made an estimation of what it looks like, you can start this process as well. So basically what you want to figure out at the end of the day, at the end of the month, at the end of the year, is what is your net position? Doesn't say it here, but net position basically means what is your total income minus your total expenses. And we want to aim for this to be positive, because if this is positive, this will give us more options. Here's an example. In the year, for 12 months, let's say we've got $25,000 coming in through wherever, and then you've got $24,000 in expenses through food, rent, purely hypothetical, just a simple example, and then you've got $1,000 left over at the end of the year. So that's positive. And that's the higher this number is, the better. Here's the flip side. same income, but the expenses are larger. You may have spent more on entertainment, might have gone on a holiday, might have ordered Uber Eats too much. So you've got a bigger expense here. And at the end of the year, you've got $3,000 less. So that's gonna be paid somehow because you've spent the money. And usually this will be a credit card debt. And you're paying a large percentage in interest to have that convenience of them loaning you money. So this is going to grow and grow and grow, and it's harder to come out. So that's what we want to avoid. So on the positive side, you know, say we have some excess income or excess cash at the end of the period. What can we use that extra $1,000 to do? Easiest thing is to save. You probably have a transactional account or a savings account with your bank. If you think you won't be spending that money in the near future, you could look at putting it in a high interest savings account. I haven't looked at this recently, but last time I checked, it was 3% as the highest. So if you put $1,000 in, at the end of the year, you'll get $30. So $1,000 30. I know it doesn't sound like much, but that's the benefit of holding it in a bank. You know that they're definitely going to pay you that $30. You can also buy assets with $1,000. You can buy shares on the stock market. You could invest it somewhere else. Like you could probably start a business, a very, you know, just as a hobby, and then you can turn it into a business. And generally, because these assets, which are shares and businesses and property, they're a lot more risky, right? So because it's riskier, you'll get a greater than 3% return. And you can do your own research to see what that looks like, but I'll explain a bit in the investment section later on. So this is super important. Pay down your debt. So if you have a debt and you have extra cash, pay it down. Pay it down before any of these two, because what you save is equal to the interest rate. What does that mean? Say your credit card interest rate was 20%.
She's outside.
Is 20%. On $3,000, that's $600 extra you have to pay that provider for giving you access to $3,000. So it's a big burn. It's a big burn on your cash, and something to avoid. So pay that down as soon as possible. Generally, it's the best thing to do and best value. So yeah, overall, if your expenses are larger than your income, you have a loss. So avoid this if possible. Spend within your means. You know, if you only have $25,000 per year, you have to spend less. Otherwise, you can end up in some significant trouble if it's not managed correctly. So how do we get positive? Say we want to get a bigger positive, or we're in a loss and we want to go positive. Couple ways. This is easier to say, harder to do, but increase your income. Get a second job, get a hobby to sell. You know, if you're good at knitting, knit some mittens for Bernie Sanders and sell them on eBay or Gumtree or Facebook Marketplace. You know, it starts out small, but you know, that's what your time and effort is there for, to increase your income. Decrease expenses. This is the fastest and easiest way to do. There's some expenses we don't want to cut, but we have to, and we'll go through some examples soon. So yeah, just some resources to touch on. These will be made available to you at the end of the session if you want. You know, we'll have Excel courses to figure out how to create your budgets. You can visit moneysmart.gov.au for a budget planner. and you could compare some high savings interest accounts through this website. Just Google high interest savings account comparison and you'll find some options. All right, so as I said, expenses are going to be the quickest way and the easiest. So exercise 1, this is something I want you guys to take away. We need to attack our expenses. So there's 3 columns: what you could stop paying, using your money on, what you can reduce, and what you're just stuck with and it's very hard to get rid of. So what you can stop, these are generally entertainment related and vices. So, these are things that you could stop and it would have a very positive impact on your cash flow. So just managing your entertainment expenses will yield some big positives for your life. Things you could reduce, generally this is done by comparisons. So utility bills, phone bills, deciding whether you use Telstra or Optus or Aldi Mobile as your phone bills, as your phone provider. You could be saving an extra $10, $20 per month. And that's something that can go towards your net position where you can invest that later on. So yeah, convenience items, Uber Eats, utility bills. So these things you can negotiate with yourself and your family on how you can save a few dollars there. And there's just some things that we're stuck with: mortgage, rent, school fees, our daily commute to work. These are things you'll need to just really write down and monitor so you can really understand what is the lowest you can go for your expenses. Here's a great tool, and you can research this after. It's called the 50-30-20 budgeting rule. It's an easy way to break down where you're spending and how you could, over time, find ways to have some savings. So say, hypothetically, let's use $100,000 now. $50,000 hypothetically will go towards your needs. So, your mortgage, your utilities, car payments, school fees, and then 30,000 will go to your entertainment. This is probably your travel, your holidays, night out the movies, really nice dinners with family, friends, gifts. But then you can't forget about yourself. And that's where the 20% comes in. $20,000 of that $100,000 you want to be putting into savings or elsewhere, like investments. So this is a good rule to remember: 50-30-20. Highly recommend that you apply this. So say the income is less, say it's 40,000. You want to figure out a way to get $8,000 into your savings per annum. And I know it's very difficult on a $40,000 income, but this is where you need to negotiate your wants and then really figure out how you get your needs down. All right, some good ideas on how to implement these tools for yourself. Set your goals. It's always good to work towards something positive at the end of the year. Like, okay, I want that holiday it's hard to travel around Australia right now. So let's say I want to go to Byron Bay, or I want to visit Tasmania. What does that holiday cost for you? And this is where you need a plan. Set that goal. Okay, it's going to cost me, I don't know the cost really. So let's just say $5,000 to go to Tasmania for accommodation, plane fares, and some entertainment. How do you, over the next 12 months, save $5,000 so that you can earn your holiday? So that's goal setting. Or you can save money Probably shouldn't have said expenses first. I shouldn't have said go on a holiday. If you can save money, definitely save money. If you can buy assets, buy assets. But you need to figure out which ones they are. And I'll talk briefly on how to evaluate an investment later on. Buddy up. You know, it's difficult to do it ourselves. So get friends that, you know, are going to be a good influence on you, and that you can create a saving budget together and keep each other in check. Golden rule, spend within your means. Similar to what I said, if you have $25,000 income per annum, try as hard as you can not to overspend above that amount. As I mentioned, slippery slope of debt, please avoid, very difficult to get out of. All right, any questions before we jump into how to evaluate an investment? Oh, great, we got a few more people. Good to see everyone. All
There's
right.
no questions on the chat, but if you'd like to put them in there, you can.
Yeah, please feel free to leave a question in the chat. Great, we'll continue. All right, so here's some interesting stuff, how to evaluate an investment. Because investments is generally what is going to be an asset for you. And if you remember, an asset will generate a future economic benefit for you, namely in increased asset price, like a increase in your home value, or increase in income. So maybe you rent out that property, so you're getting rental income. So this will interest a lot because finance is quite complex. There's a lot of investments, and generally what finance types usually break down investments into are asset classes. So these are types of assets, all right? And an asset class is a group of financial instruments that share similar characteristics in the marketplace. So the easiest way to explain that to you guys is think about shares. Shares in the stock market, you're basically buying part of that company, and you're buying a part of that company to benefit from any dividends or any increase in the value of that company. And they usually sit under equity. So stocks, shares, ETFs, these are considered equity, ownership into a business. So another way to think about that is if you start a business tomorrow, you start a company, you'll need to have shareholders. And usually if you're just creating it for yourself, you'll own 100% of that business, and you'll have 100% of ownership in the business, and that asset is called equity. So what you'd all be familiar with is cash, money in your savings account, money in your wallet. And this is the most liquid asset class. What that means is you can exchange it for things very easily. You can use that cash to buy property, you can use that cash to buy shares, or any of these sort of fixed income and commodities assets. A general rule here is only invest in what you understand. People get into trouble by investing in things that they don't understand too deeply. So when things change, money is lost, and that's a situation we want to avoid. So arm yourself with knowledge, read, watch things that will help you understand investments and markets a bit more, so you can place your money in areas that will lead to your future wealth. Does anyone want me to explain anything about fixed income and commodities? They're generally less used, but not less used, but less common for everyday investors. Nope. Okay. Basically, commodities are gold, silver, things that, corn, primary produce. So, and fixed income is debt. So banks lend debt and they get money, they get interest from that debt. So when you're thinking about investing, here's a few areas you can evaluate. You can evaluate the team. So you look at the company, the people managing the company, operating the company. What is their experience? How long have they been doing this? Have they achieved great results? What is their track record? What are their skill sets like? Are they talented? Are they good at marketing? Are they good at sales? Are they good at product development, manufacturing? These are things you need to consider for that business. Expectations of the company. Is it too optimistic? Do they think they're going to do 10 times growth in the next year? If you look at the facts, are they being too optimistic? Does it make sense on how they're going to get the 10 times growth? Without backup or explanation, it's just words. So ideas are always good, but execution is super important to ensure that you achieve the objectives and people can have a reasonable expectation of what you're going to deliver. Your risk appetite. This is unique to everyone. So for instance, if you invest in one thing, you might get 2% return, or you might put in another thing, you get 20% return. The reason that the return is much higher is because there exists this thing, which is a trade-off. It's between risk and reward. So the higher the risk, so say I'm going to give it to this property development and they're promising me 20% return, but it looks a bit shaky. The property market, maybe, I'm not applying it to today's market, but I'm just saying, it might be difficult to get a return. That's why they're offering a high return, because the risk is very high. They need to build the place, they need to sell the place, and there's a lot of unforeseen risks that could happen for that development not to happen. Could be an earthquake, it could be a flood, it could be a fire. They can't find the right people to work on the job. So there's risks. And that's why at a bank, you'll get less than 1% return, because at the end of the day, the bank is going to make sure that you get your money back. So that's why the return is so low for a bank account. And that's why stocks, shares, investment property are generally higher, because you have to take that risk. And if the risk is too much for you, then generally you wouldn't want to take that asset, because if all things go not to plan, you're going to not get your return back. Also important to consider is your own time horizon. What does that mean? That means how long will you be able to keep investing and keep the money in that investment? So you need to think about how old you are. Are you in your 20s? Do you have a growing family? Are you retired? How much time left do you have to grow your wealth? Because here's a very good example. Say you're in your 60s and you're about to retire. You're not going to put 100% of your money into the highest risk asset, because overnight it can disappear. That's why you'll tend to see people with a shorter time horizon, so if you're in your 60s, your time horizon might be under 5 years or under 10 years. So you can't weather the storm of things going wrong. So that's something you really need to consider. What is your time horizon, and what is your risk appetite? Any questions on these areas of evaluation?
No questions on the chat.
Great, easy chat. All right, let's jump back in. Finally, this is the last topic, how to manage your tax return. It's a necessary evil that we must do every year just to make sure that things keep ticking along. The reason why we pay tax is because the government will receive your tax and they will invest it in areas of the economy for the greater good. So they'll invest it in roads, hospitals,
Anto, culpa coge. Anto Maresi. Anto Maresi.
defense, welfare. So there's a lot of areas that your tax money flows into, so that there's a benefit shared by everyone. So parks, keeping the parks nice, keeping the roads nice, keeping the beaches clean. So yeah, all of those. So tax return, what we'll talk about is how to calculate your tax. Tax brackets, some examples, how to plan, and also what happens after you lodge your tax return. If it gets a little too complex, don't worry too much, because usually an accountant will help you, or a tax agent will help you do all of these. All you need to do is give your information regarding your expenses, your payment slips to your accountant, so they can figure this all out for you. So step one, there's a few steps. Figure out your income, figure out what deductions are. Deductions are basically money that you've spent, which will that was related to your work. So for instance, if you're a truck driver and it's necessary for you to get a special driver's license, your payment of that license can be considered a deduction, because that's necessary for you to do your job. However, it doesn't apply for regular licenses. If you're just commuting to work, you have an office job, or you're in hospitality and you need a park at your job, your driver's license isn't considered a deduction, because it's considered more a personal expense than a work expense. So that's a very important distinction to make when you think, is this expense a deduction or not? Then once you've got that, we can apply the tax rates, which will show you how much tax the government is looking to obtain from you. And then you can apply some tax offsets that are applicable to you, which lower your tax payable. But then we need to add Medicare levy, and then tax credits. We need to calculate tax credits and offsets. And then above that, once we add everything together, you have a result, which is either a tax refund, which, let's not be shy, everyone enjoys a tax refund, and a tax payable, where you'll need to pay tax. And as I said, this money will be used by the government to help people in our society. So it's important. Australian income tax rates for 2021. So the end of the tax year is coming up. It's 30 June 2021. So you still got 3 more months left before these rates apply. This is for Australian residents. As you can see, your first $18,200, you don't pay any tax. So, at the end of the day, you're going to get at least that much. And then the next bracket, 18,200 to 45,000, it's 19%. And then Australia's tax system is a progressive tax system, which means the more money you make, the higher tax rate you pay. So as you can see, once you're over $180,000, you need to pay $51,000 plus 45 cents on every dollar above $180,000. So very, very high. So here's an example for a $40,000 income. If you want to figure out what your tax is going to look like at the end of the year, I love using this website, paycalculator.com.au. It's free. And it'll show you your taxable income. Here's your 40,000. This is per annum. And then here's what your super looks like, superannuation, 9.5%. And then here's the tax you're looking to pay, income tax. You've got some tax offsets. Here's your Medicare levy. And then here's your estimated tax return. It's a very, very cool tool to figure out what it'll look like. And it also gives you weekly, fortnightly, monthly, so you can figure out what your pay looks like every week or every fortnight or every month. And this will help you build your budget. So grab this number when you do this and then put it into your budget every month and then try to spend under that every month, and generally you'll be okay. Here's another example for 130,000 higher income, but I don't think we'll go too in depth into it. Basically, it's just showing the steps, income minus deductions, applying the tax brackets. Here's the Medicare levy. Here's some offsets, and then here's your result. This gentleman, John, he's got a tax payable of $36,000 at the end of the year, which goes to the government to pay for all the good things. So here's some key takeaway for you about your tax return, how to plan for it. So you can start collecting information throughout the year, so it's not such a big hassle at the end of the year. When you receive your payment summaries or your payment slips, dividend statements, rental property statements, keep them in one place so it's easy to access and easy for you to go through at the end of the year or give to your accountant. Review your bank statements. You might find some expenses that you spent for work, and this could be a deduction which will lower your tax payable. So maybe you bought some stationery, work uniform, relevant licenses. So there's a couple options. You can get a tax agent, an accountant to help you out. PopTax, we do tailored for average $49 the cost, and it's guided, so that will help you out there. MyGov is the free option as well. For super simple tax returns where you think you can't maximize your refund, that's the free option for you as well. So say now that you've lodged your tax return, what can you expect? All right, so tax refund. This is great because now you're getting cash back into your bank account, and now we can use some of the money management skills we learned earlier in the workshop. We can put it towards a savings. We can start investing in those asset classes that we mentioned, or we could pay down debt, which, as I said, is going to be the best way to help your situation if you have a debt. But of course, speak to a financial advisor about any of this stuff because it might be unique to your circumstance where it's better to do one thing or the other. So this isn't, do your own research as well. Tax payable position. So if you've got a payable at the end of the day and you completed it by yourself, maybe you missed out some deductions. So perhaps speak to an accountant if they can reduce this, or it can help you plan better next year so your cash flow isn't affected as much. If you're in a tax payable, and it's difficult to pay, you can speak with the ATO. They're generally really helpful because if you come to them with some of your issues, they're the government. They're there to provide a way for you to keep going. So they might provide you with a way to pay the debt over time, and probably one of the easiest ways to do it as well. All right, guys, we're going to go into the Q&A. Thank you for joining us for the workshop. probably still 10 to 15 more minutes left while we do some closing remarks, but do you have any questions or answers that we can help you with?
Sid, there aren't any questions on the chat. There's just a message in there from Frank.
Sorry, that's Tamkin, from Frank's laptop.
Oh, gotcha.
So mentorships, yes, we're currently building out the mentorship program. It'd be great to get those details, whoever's interested, so that we can start finding the right people to help on the one-on-one mentorships. So I think we can definitely take that offline as well and talk more about it.
Yep. Also, sorry, I think one second. If we can have people contact me, anyone who has joined but has not registered with me, that's Tamkin. If they can please call me or email me, so then I can register them on our system. That'd be much appreciated.
Brilliant. Any questions from the audience? That anything happening in your life specifically where you're a bit worried, or you feel like you could use your money more wisely? Any questions there?
No. All
Okay,
right.
Mark.
Thanks so much, everyone, for being here. Really appreciate your time this afternoon.
I would like to
Sorry.
say thank you if you could hear me.
Yep.
Sorry, I have been out and about and in other meetings, as you know, Sydney. I hope you may have explained, but yeah, my apologies. I couldn't join properly. I'm just on the road as well from point A to B. So thank you very much for joining us, and we look forward to serving you in finances as well as some other venues as well. And as Sydney has talked about the mentorship program that we're going to roll out in group setting, we are really looking forward to that. Thank you.
Right. Thank you.
Thanks, Kumar. Sid, can I just quickly ask on behalf of some people? I think majority of people that I have worked with have their ABNs, and
Yeah.
I think they're not sure about the impact of ABN and tax, and if they do receive Centrelink benefits, how does that impact? Can you just kind of elaborate on that?
Sure. So just briefly, I won't be able to talk too much on the Centrelink benefits part, but in terms of ABN, any income that your guys are earning through the ABN, that'll be considered income. And generally, there's no PAYG credits, which you get when you're employed. So the tax, they might have a surprise tax bill at the end, because they'll need to sort of put aside 25 to 30% of their income from the ABN as part of the tax. So I think these are very specific scenarios, which I'd love to talk to your people one-on-one.
Yeah, I think one-on-one for sure. And also, I think ABN, I don't know if everybody here on this group knows it's Australian business number, which there's a process, and if they can talk to me, I can refer them to our Business Connect advisors, language specific, who can help them create ABN numbers. So then they can actually operate as sole traders, and they can be tutors, they can do anything under that ABN number. But be mindful of the tax, like Sid mentioned. So if you want any further information, you can contact Sid as well and get some one-on-one information.
Yeah, thank you, Tamkin. So I guess what to expect from Opportunities Australia Next. Thank you so much for coming. It's really great to share this knowledge with you all, and hopefully it was valuable to you and your families, of course. So there's a few ways to help us out. Please join the Opportunities Australia movement, visit our website, and if you can donate to our cause through this website, open the conversation with us through LinkedIn and Facebook. You can search us on Google, Opportunities Australia, or email us directly at care@opportunitiesaustralia.org.au. And if you know anyone that would love to become a member to help more people, volunteer, or you know people that would, businesses that would like to partner with a company, with an organization that wants to have this social impact in the world, please let us know. But yeah, you know, remember this stuff, and then thank you again for coming. A few things to remember. Implement these tools in your life, buddy up, find someone that will help support your wealth journey, save well, use money wisely. Please reach out to Freya for a copy of these slides.
Fantastic. Thanks, everyone. Really appreciate your time. Have good rest of your afternoons and lovely long weekends.
Have a great weekend, everyone. Thank you very much.
Thank you so much. You too. Bye.
Thank you. Bye.